Good evening. There was no rest for the weary at all on Wall Street today. Another brutally bearish session which left the market shaking, the frustration spilling over into a deadly confrontation in Florida. As the Dow Jones was heading toward its second worst day ever, down 156 points. A big loser in the stock market fallout opened fire in a Miami Merrill Lynch office. Police say 53-year-old Arthur Kane shot and killed himself after murdering the office manager and critically wounding another executive. The distraught wife of the injured broker was brought to the scene and given the troubling news. Her husband had been shot.
Oh no, my baby!
Authorities say the gunman had been asked to cover heavy debts arising from losses on Wall Street. Instead of settling his account, he pulled out a gun.
A customer of the brokerage firm, an Arthur Kane, 53 years of age, came in, opened fire on two vice presidents of the company, killing one of them on the scene. Mr. Kane then turned the gun on himself and took his own life.
The surviving broker was airlifted to a nearby hospital in critical condition. Office workers just could not believe what had happened.
My manager? I don't know what to say. I really don't. All I know is, I just want to go home.
One official at the office located in a fashionable shopping center said violent crime there was unheard of there. Said the man, "I'm sick, I'm crushed."
Well, today's shooting in Miami is perhaps a symbolic bubble of stress and anxiety that simply burst, a bubble that has been expanding ever since last week's Black Monday. Channel 2's Mike Schneider is live now at the New York Stock Exchange with reaction. Mike?
Carol, we referred back to Black Monday. They're calling this Black and Blue Monday here on the Stock Exchange today. The numbers are down, and they're down quite a bit. A lot of people had expected some sort of decline today. They didn't feel that just because Friday came and went and Monday arrived and it was a brand new week that things would get dramatically better here in the market. Not by a long shot, especially when they got the early returns in, that things had gone very bad on the overseas exchanges in Tokyo and London and Hong Kong. But today they really weren't quite prepared to see it decline nearly as much as it did. 156 points. That is the worst, the second worst decline in history by a sheer number standpoint, and the eighth worst in terms of percentage. It closed at 1793 today. The volume was 308 million shares, so another bad day. And once again, we should remind you that the session was shortened by 2 hours again. The market once again closing at 2 p.m. My colleague John Slattery is joining me right now, and I understand, John, they're going to close it at 2 p.m. throughout the rest of the week.
That's right. It's something they're going to have to do in order to handle the huge volume. The reaction from brokers here today to what happened here on Wall Street can really be called a mixed bag. Some felt that with the Dow down so far, it was merely as expected. But others feel that we're really far from out of the woods. Yet as you look at the floor this afternoon, which last week at this time and all last week was pretty much still littered with people doing work at this hour of the evening, tonight very light activity as brokers begin to take a breather. This afternoon's closing bell at 2 p.m. was a welcome relief to most traders, many of whom had to work this weekend in order to process all of last week's trading.
We really needed the weekend very, very much to help us out and straighten us out of this thing.
Today, most traders said the atmosphere on the floor, despite the heavy trading, was much closer to normal.
There was no panic, so I think that's the better side of the whole market.
Even though the Dow was down?
Even though it's down, no one's panicking, rushing in, killing each other just to sell their stocks.
But plenty of stocks were sold. Losers outnumbered gainers 13-1. At 10 a.m., the Dow was down 85 points at 1865.71. At 11 a.m., the Dow was down 96 points. At noon, down 132. At 1 p.m., down 120 points. And at the close, down 156 points.
It's a sign that a lot of us expected things will stabilize. We think that things will stabilize.
Experts say the dip in the Dow would have been much worse today, duplicating last week when computerized sell-off orders kicked in, dumping huge lots of blue-chip stocks. But today, people were more in control, and computerized selling was pretty much suspended.
Well, we had a meltdown, or a near meltdown, last Monday. Primarily, not because of anything happening in the economy, but because of these very sophisticated computer techniques. And that's eliminated today, and the market's coming back.
The ticker, hours behind last week, was only about a half hour behind at its worst today and was with the market or just minutes behind much of the day.
Slow compared to last week.
Do you feel encouraged by this?
Well, I feel encouraged myself, my own opinion, because I feel that people are waiting to see what the response is going to be from the government. I feel the government's going to help us, you know.
And while the exchange had planned to be closing early only 3 days, it announced late this afternoon it will close at 2 p.m. all the rest of this week.
We want to assure everyone that the systems are continue to operate efficiently, and we are taking this action to assure that.
So, a shortened day all the rest of the week. The volume, however, even on this shortened day, is still enormous, 350 million shares today. Brokers and investors hope that the selling and the losses will ease off and that some confidence will rebuild in this market. Michael?
And perhaps a measure of the confidence will come not from here, but when we start getting the results of what happens in Tokyo, which the markets will be open there in a short period, and then London, of course, and Hong Kong, and once again back here. The question is, when will somebody start building the confidence for the other markets? Which one will take the lead first? And I guess that's something that the analysts really can't agree on.
A lot of people are looking for that from Washington, hoping that the deficit can be reduced, and that's the argument over taxes versus savings.
Okay, John. Let's go back to the studio.
Mike and John, I don't want to be in a position of throwing gasoline on a fire, but have you heard any people down there speaking about genuinely now being really afraid of what's going to happen?
I could not hear the question.
I couldn't either, Jim.
Jim, we're having a little audio problem.
Okay, can you not hear? Can you hear me now?
Yes.
Yeah.
Have you met any people down there who now say they are genuinely frightened about what they think is going to happen?
Sure, yeah. Especially the younger brokers who, as we pointed out earlier, they have never really seen a bear market before, and they are frightened. And an awful lot of people who've taken their paper profits, reinvested them in more paper, expecting to have a huge windfall, have suddenly seen that completely wiped out. So now they're back to what they may have had a few years ago, square one. They may have had hundreds of thousands of dollars, and now they're pretty much wiped out.
Some of the older brokers, we might add, express more confidence in where things are going, but we can't tell if they're truly more confident or just better at covering up their anxiety.
Mike, John, thank you very much. Good reporting, gentlemen. Once again, the worries on Wall Street spread all over the world today. Stock markets overseas taking a brutal beating. Hardest hit was the Hong Kong exchange, open for the first time in 4 days. This was their Black Monday. Stocks plunging 33%. Hong Kong's worst one-day drop on record. In Tokyo, the drop was not so steep, close to 5%, but it's still the third biggest decline in the history of Tokyo's market. In London, despite fast and furious trading, the story was about the same. Stocks sinking more than 7%. And the dollar was also down today throughout the European continent. That could force up interest rates in this country to attract foreign investor money necessary to finance the United States budget deficit.
And Jim, with all the focus now on that deficit, President Reagan began talks on it today with congressional leaders. Those talks are expected to focus on ways to trim the deficit by at least $23 billion, including possibly massive spending cuts and possible tax hikes. Although many Democrats are blaming the president for the deficit, the first session was described as hopeful.
We do have some fundamental agreements. One of them is that we surely will go forward and achieve the $23 billion deficit reduction.
The president said we're here to come together and get some agreement on the figures. I'm not going to lay any preconditions. I said the other night that all's on the table except Social Security, and we'll go from here.
Well, President Reagan has indicated he is open to almost all proposals except cuts in Social Security. The talks continue tomorrow afternoon. Jim?
While much of the economic turmoil is focusing on the big investors and their big losses, the small investors are sitting in the shadows, nervously watching their money. That story from correspondent Josh Menkowitz.
1 week after Black Monday, stockbrokers are discovering their clients' moods are still dark.
They're extremely nervous. And what I've been telling them is to stay calm. It's my job to help them to protect their capital.
Good afternoon, Todd Selter. Talk to me.
The sense here in Great Neck is that while many continue to sell, their confidence either shaken or destroyed, some investors are looking for bargains, picking up cheap stocks while the market's low. Sometimes they get lucky.
Terry, can you cut a check for Norman Cohn, please?
How low will it go? How bad will it get? Merrill Lynch brokers get the word off the street via a squawk box.
Other than possibly a break to marginal new lows, we've seen the worst in the Dow, and that it probably won't break substantially beneath Tuesday's intraday low.
Who's safest? Perhaps those in safe stocks, utilities, tax-free bonds, and government mortgages. Harold Suss handles about 300 fixed-income clients.
People are pretty realistic, and when you explain what a person's particular situation is, they're reassured and then don't call you for another day.
Brokers had been hoping that shorter trading hours on the exchange would give everyone a chance to catch their breath and perhaps bring some stability to the market. But today's steep drop didn't do anything to restore investors' confidence. At the Charles Schwab offices in Great Neck, investors crowded around the Quotron machines and offered their own theories as to what caused the collapse and how to pull out of it.
If the president doesn't reduce the deficit, everybody loses.
But we're all going broke, and I got that window there. The value of my assets went down in half. And my attitude is just to sit back and wait and probably take a few years to recover.
Both buyers and sellers tonight are looking at another week of uncertainty. Brokers are saying keep calm, but their customers don't see anything calming on the bottom line. In Great Neck, Josh Mankiewicz, Channel 2 News.
Well, coming up, a